very clear, and yeah, and everyone is hearing it clearly. So today we are going to discuss for a few minutes about the time frames, and why it's useful, and why most of people stuck in trading, because this is kind of psychological way. So most of people, when they come into trading, they come with that kind of mindset that they need to make money now, and this is hard, like to put your willpower against market makers, because they are here to destroy you. And by the way, they are not thinking about you at all, just you come in their side. And the only thing here that we need to focus in is the time frames, and why they are useful, and who is the candlestick are actually formed, and who is the one who come with this idea of candlestick in the first place. And yeah, this is all illusion, this is all fake, this is all like my way to look at the market. It's nothing personal, but once you understand what I'm talking about, you will understand the real facts. So when you come into trading, you have this kind of platforms to analyze, which is TradingView or whatever the platform you analyze. But in the end of the day, you analyze some candlestick in the chart. This is the end of the day. Anything you analyze, either you analyze volume, you analyze whatever, you look at the candlestick. And imagine now, like you say 4H. Which platform create this kind of 4H at the first place? Like, is that actually matter? And the thing here is that you pay attention to it is what this market maker actually make money, like given all these kind of time frames, just in sake of to destroy your thinking. And imagine now in 4H, you are looking at the chart in 4H, and you have a clear bias that the market is going to go higher. You jump for a buy, and the market actually, yeah, it will go higher in 4H. It will print a green candle. Does not actually mean it will print now. So it can easily go for 1 hour red and then come back all the way again green. This is a probability. It's not certain, but in the end, you're certain that in 4H it will go green. So this is a psychological way. We are not here to talk about just 4H. Imagine that what happened to you in weekly candle. Imagine what will happen in the monthly candle. How many illusions are there? How many traps? People going for buy, sell, buy, all thinking the same process. And if anyone like have a question, is actually matter to look at the candlestick time frames, like changing the time frame for 1H for 4H, one candle to another candle. Is that actually matter? And is that actually useful? Some people catching like supply demand using 4H. He say, oh, okay, this 4H is more probability than 1 hour. This is nonsense. And another person they tell, oh, okay, I'm going for fair value gap that will form in 5 minutes, 15 minutes. Why not 13 minutes? How did you decide 15 minutes at the first place? So now you are talking like as an open mind. You just ignore the box, ignore what they told you, and then think with me. Imagine now why you are not using 15 minutes for your break of strike. Why are you using just 15 minutes? Yeah, why not 12 minutes? Does it actually make a sense for you? No. Basically, I'm just answering your question that you're supposed to answer with your mind, with your logical, with your conscious. So this market maker, this is like just an orchestra for the banks to make money, with riches like thinking they can come into this market, and then every day jump in a trade. They will find a clear setup, buy, buy, sell, buy, whatever, and then yeah, you can make money. For example, this is Bitcoin. Yesterday, when I was in the live with you, I told you Bitcoin we have a value area low, which is this one. This one. I told you if we break through it, you have to look for buys to the PLC, and that never been happen because the market does not decide someone will come and buy at the real value. Because if someone comes to decide that, the market immediately will run to the PLC, but no one, so the market actually consolidate below where the value area of yesterday. This is bad. This is continuation for downtrend for what actually happened here. So that's why the market in crypto today dump, and has nothing to do with technical, and has nothing to do with for each candle 12 candles so daily candle. No, 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 no. It just has to do with auction. So today our like title for this video, time frames. Time frames are fake. It's just like an orchestra being created by institutional and these guys to just drop people, yeah, in the opposite direction. And even if you make money, it's just by coincidence. Like if you're just using this kind of time frames, fair value gap, for example, 15 minutes, okay, 1 hour, so like it just like random to make money. If you use like a supply demand in for H, for example, this guy, another guy said, okay, it's in the daily, it's better. It's just a coincidence you are making money this kind of way. But the real people, look, for example, here, look where they accumulate here. Do you think in this day, the next day, which is the next candle of the day, the next auction, they will let the price to move higher where they actually the auction happen, where the people being trapped in a buy position? That's never gonna happen. So the market actually will hunt their stop losses. So that's the real way to look at the market. You have to look at the auction. You have to understand the auction. You have to understand what's really going on behind the scene, not just what's happening with printing for you in the candlesticks. Look, do you think this guy has trapping people? Oh, the market will reverse because they don't understand the auction. Going for buys in London, wherever, and then the market now dump all this money he accumulated here during the London. Do you think now he will let the market to come back all to take all his profit? No. If he's actually reached his objective, he is out already, so he can lose it. But when he is aiming for more, he will not offer you premium to sell. So this is the way that you understand the market. The market, if the market really knows that the market will like keep going lower, it will not offer you a premium. Like for example, from this move to this move, this is the premium. Okay, does the market actually offer that? No, this is a continuation. You know what I'm thinking about is if someone he believe something will go deep, he will sell it to you at the current price market. Okay, so this is reality. If someone have a question, feel free to ask me in the comments. But if someone he know the market is going to go down after huge pumping, he will not actually sell it to you at the marketplace. Okay, even if he know it will reverse, even if he is sure about that, he actually will keep the market consolidated because he does not want to sell at market order. No, he will start selling slowly, and this is where they come that kind of pump, accumulate, and then reverse. So how you know accumulate market has more buyers or sellers? If more buyers, market go down. If sellers goes up. But how you know the ratio? There is a couple of indicators that you have to pay attention to with Madness. Just give me a second, I'm going to back for you, just 1 second. So, your question, if I get it correctly, you mean to know which one is more powerful, okay? The idea here is very simple. Is you have to use let me tell you, you have to use cumulative volume delta, which is very powerful. If, for example, if the price, like here, if you open an indicator cumulative volume delta, what you will find? You will find cumulative volume delta start doing lower lows and the price think to go higher. Even like the price making a lower low here, okay, and he failed to go more deep, but cumulative volume delta kept going lower. This is bad. This is continuation. So what you mean? The sellers are in control, or or if the market here dump and then cumulative volume delta rise up, and then the market did not go higher. This is like actually continuation. This is kind of two setup, and also like you look for open interest. If the market goes down and open interest starts going higher, this is bad. This is continuation, which means more people are shorting. So this is kind of indicators that you have to look for. And yeah, if you have another question, you can feel free. So cumulative volume delta. Okay, thank you, brother. Thank you. If you have any question, so you can just ask me. I am here to answer your questions. If anyone like has he want to contact with me, this is my Telegram user. So yeah, that's my Telegram user. You can contact me there if you have extra questions. And yeah, so the idea here is very simple. You have to understand the option, and view up actually helping you with detecting the trend. For example, I have a couple of view ups here. It's just like let me show you, for example, but I just don't want to mess up all the chart. So that's the kind of stuff that you have to pay attention to it. And the second thing, by the way, this view up is just in my trading view. It's not in the official trading view. So if anyone DM me in Telegram, and then maybe I can give it away for some people, not all, but just some. So yeah, like for example here, as you see the price like break out above the view up and then just dump. This is where people dropped it, and not people, just high frequency trader. And then as you see the price consolidates below the view up, and then this is continuation. Now it's like a bearish. As you see, we will be bearish if we back above the view ups, which is 65 100 in Bitcoin. We will be very bullish, but not now, I think. So that's kind of stuff that you have to understand. You have to understand VWAP, you have to understand volume profile in order to understand or is in control. Not just like a candlestick. Candlestick is just like a theory that someone brings to the marketplace to increase the profit of the banks and then take out the people's money, because this is how the banks work. The banks actually are not trading. It's just like a market maker is offering the trading in the market. It just how can I tell you? He's just offering orders in order book, okay, and he make money by the commissions by a couple of trades. So that's why some people, when you join their commission stuff, they want you to take a lot of trades. That kind of group of VIPs like that, because they make money like that. So whenever you enter a trade, they make commissions according to that. It depends where you enter the trade. So the more lots you use, the more money they make. So usually they just enter the trade and close it the same way. So like entering a couple of trades a day, so they make $100 a day, 200, 500. Some people make $1,000 a day just by doing that. And yeah, that's kind of other businesses of trading. And this is has not related to market maker. Market maker has using a different strategy, as offering orders in the order book, and whenever he have insider information and they already manipulate that, they already map the market where to go, they just cancel the order in the order book. That's why the market think like that, and like it gap sometime in the forex or in the futures market, because they close all the orders, so no order in the order book, which means you need only one lot, the market will rise up. So that's why in the NFP, for example, the market, you will tell, oh, why if you put the volume profile in the candle of funding rate, for example, you will find 0.0000, but you will find only one lot, or for example, three lot, three lot, which means just one with three lot cause all that chaos, but it's very speed bump, and that guy is like the official bank of United States. By the way, it's like a settlement bank, not just a normal bank. He decided where the market to go down, up. So, yeah, by understanding the volume, you can understand who these guys are thinking. Okay, for example, here if we just like that, as we explained yesterday, as you see, the market close at the POC, the value area high, being trapping a lot of people here. So look, so this is what it's like a supply zone. Look what the market, what's happening when the market come to it, boom, rejects. So this is like a bearish signature. And look at the same thing when people starting being interrupted above the value area. This is what supply. That's why the market hold here and then dump again. So this kind of things that you have to pay attention to it. So here we don't have that enough people being interrupted above the value area high. So yeah, yesterday I was expecting the market to move higher, but I was waiting for the value area to be crossed. And yesterday I told you, if we go back for the POC here and we accumulate, this is your buy signature. So go for 68, 69,000. I'm talking about Bitcoin. And yeah, we never get that, and then the market is rushing down. So if anyone have a question, feel free to ask me in the comment and read on everyone. And make sure you like the live if you like what I'm talking about. Actually, I'm talking about the reality of trading. It's not something new. And yeah, that's the first thing. Okay, so any question? Any question, guys? Like after a few minutes, I'm closing the live. So which time that you see is the most useful time we do live? You can tell me in the comment. So now I'm going to see if like very useful in my opinion. We can start the wheel live like 1 hour, 2 hour, explaining some stuff about the volume, about other indicators, cumulative volume, delta, all of this kind of indicator. That I think will be helpful for most of people. Certainly, because I'm looking at the market, trading space has lost a lot of potential and a lot of his audience because just of these guys scamming people. So that's people like this is the reality. People, because there is hundreds of way to make money from trading, hundreds, like thousands of way. People are telling you, okay, you have to sign up in that kind of broker to enter my VIP. So now I'm going to give you my analysis, my trading ideas. So I think that guy, he makes so much money just by using this kind of strategy, and I think most of people are doing that, by the way. So and this is a business, okay? This is a business. This is not I'm blaming them, but I'm blaming the community for not understanding what the hell they are doing. And also I'm blaming like the people that they think okay, so I'm blaming the people that they think this kind of way. I'm here, I'm opening the chart at the 15 minutes. I need to have a trading idea now. For example, for me, all the week I have, I think, two trades, okay, one win, one lose, and yeah, this is all my week. And now I'm looking for another ideas to trade, but for now this week I'm prefer to stay because I enter a very good trade in oil before they announced that there is a deal. I was shorting it at, I think, 95. So that's my best trade for this month actually. So because I was anticipating that the market will go down, because most of people think the market will go higher because this kind of Trump stuff. So yeah, there's because the volume profile telling me that a lot of people will be interrupted at the top because you need to buy at the higher prices. So because they chase, so that's why I went for sell, and according to that it went perfectly right. So that's my idea, and I catch another buy opportunity in Bitcoin. So barely at the bottom of the range, somewhere at the bottom, it's 61 I think, or 62. So yeah, and I hold it until 64 or 62 until 64 I think, or 64 500 if I didn't didn't remember the exact prices. So this is all my month. It's 19 days, it's not that much, but all these trades, 4 trades, and one in US 30 I went for buy before Trump also announced he will sign the deal. I think in the bottom of the week of this week that we are in. So no, the previous week, sorry, previous week is, I remember the previous week, not this week. So it's 19 days. I think I have 5 trades. So one lose, 4 win. And this is like my normal stuff. So because I am not a day trader, I am swing trader. Like at least my trade will take 2 days, 3 days. So that's barely what I'm doing. If anyone have a question, you can be free to ask me any questions in the comment section. So you can ask me in any language, so I can understand what you are talking about. Just Chinese, no. You can ask me French, English, Arabic, no problem, I can understand. So and one of the main reason why people stuck in trading is the open chart. Like for example, 15 minutes. I see the market rise. Now I see it think a little bit. I open up for H. I will find a big fair value gap. Okay, this is a bearish. Great. So now I am anticipating the trend is bearish in 4H. Okay. So now I am trusting the bias is bearish in 4H. So now I will go for, let's say, 1 hour 15 minutes. I will look for another bearish fair value, and I'm going to enter that 1 hour fair value gap that you enter. For example, in 30 minutes, 15 minutes. For example, this is just examples. Is that actually even matter to the 4H or not? It does not matter to the 4H. Maybe 4H can go all the way, take this high, and then come down because it's still in 4H. 15 minutes inside of 4H. That's the problem. That's the problem. This is where probability came. So there is no like this kind of stuff of protected high, protected low, this kind of bullshit. No. It's not exist here. Why? You have to understand where people being trapped. So the market will never come to it. If you are bearish, if you believe the market will bearish, will go bearish, it will not come back here, because this is where people bought. They bought at the top. The market will not come there. If it come there, which means it's looking for these highs. So this is what you have to think. You have to think like a bank. You have to think like a smart money. For example, this day, why it continuing? Why it continuing going down? Even if you go blindly short there and put in your stop loss there, where people being trapped, do you think the market will take your stop? No. But if you go for that fair value gap, you see that market move lower, you put your stop loss break even or your stop loss above that one, you just be out, and then market think lower again. So this is reality. This is how this life work. And you have to always look at the value area low, which is this one, and this kind of, now people are chasing the bottom to sell. Okay, now we create the value area low. Now what people will do, now they chase the market because they see it go down aggressively wherever they chase. So if now just rise up, this is where people trap, because this is why low volume low. If the market now rise, where is the safest stop loss? Do you think below this low or this one? I think here, because the market will not come all the way to the value area low. If it hit the POC, immediately will hit these guys. So this is your like hanging fruit, as the people talk about. If the market hit this one, usually hit these guys. It's simple, and maybe it will trade into the POC. So yeah, because there is a rules for the auction, and this day let me give you another explanation for that. Whenever you find a POC and that's never been touched, okay, which means the daily close, and we never trade into it in the next day, they usually come to it later on. So if you are swing trader, I don't advise you to put your stop loss there, even if you believe the market will run lower. No, because the market will smack that up. Let me give you some kind of example, because that one, it will be like so much helpful. Like this one. This is where daily close happen, and this is where the POC. Now we are here. If you tell someone the market will come all the way here, because this is a version POC, it need to be touched, because this day we never trade into the real value. And as you see, if you put a line here in the POC and we drag that one, look, the market did not come back to it 2 days, 3 days, but it just in a range. It didn't go far, no, just in a range. And then it come near to it and then it rejects. If you understand this note that I'm telling you here, you will not go for buy here. Okay? You will wait for that one, and then we come back to later on. But for the sake of continuation the trend, normally we don't come back to it. Normally, if you are in very aggressive trend, but this is weak trend, that's why the market came to it, and then it accumulate, it take the low of the day, so because it have a lot of stops below that. So I hope that kind of information actually help you, and that's kind of idea that you have to think about, why this thing, why that one. And as you see, the oil go down from the live that we talked yesterday, but it actually did not go back to where we wanted to enter. It just go down. So if anyone have a question, you can ask me in the comments. It's normal. If you don't have a question, like I will feel free to go, because people now, they're just watching the footballs, they are busy with that kind of games. It's a distraction. It's a distraction for their mind. The football is good. Yeah, and I think I think this is the reality. But the thing is, you don't need to distract yourself a lot, especially when trading. When you are a trader, like avoid this kind of dopamine stuff a lot because it just make you think not clear, and then you take a bad actions, and this is actually hurt your mind. So yeah, that's the real stuff. So yeah, that's thing. So does anyone here have a question? Does anyone here have a question? For the next video, I'm going to explain a lot about the cumulative volume delta. So make sure you subscribe, and yeah, I'm going to explain cumulative volume delta, and the second one is open interest. We'll do a video about it, and yeah, I'm going to explain to you also how to detect real order blocks. Not actually the dumbest way to do it, just by looking at the candle go up. No, there is a ways to do that. So yeah, feel free to ask any question. So guys, I think no question, no more question. The only question that we have now is cumulative volume delta. We explain it. So now I'm going to go. See you in the next live.